This podcast is sponsored by Murgitroyd, intellectual property attorneys. For more information on today's guest and our company, visit murgitroyd.com/podcasts.
Hello and welcome to the 5th season of Murgitroyd's Innovation Talks podcasts. We're delighted you have joined us. If you have any questions, you can email us at innovation.talks@murgitroyd.com or contact us via Twitter @Murgitroyd. And please remember to subscribe so you don't miss any future episodes. So let's go straight into today's podcast. Hello, I'm Kevin Toner and I work in the business development side of Murgitroyd. And today's podcast is focused on research and development tax relief. We hope today's recording will help you understand more about the importance and the benefits of R&D tax relief. Now, there are a variety of accountants or financial providers who specialise in this area, and we're delighted to welcome one of them today, Brendan Rorrison from Leyton. Thanks for joining us today, Brendan.
It's an absolute pleasure to be here, Kevin, and looking forward to informing everyone about the R&D tax scheme and how it could be beneficial for a wide range of clients and companies.
That's great, thank you. So I think best place to start is in the simplest terms. What is this R&D tax relief all about, Brendan?
So effectively, the research and development tax scheme that the HMRC have is effectively to reward companies who undertake frequent work that is not only advancing the public domain, but also helps in terms of innovations in their company so that they can achieve goals that weren't previously possible. And the good thing about that is that means that it extends across a wide range of industries such as science, engineering, software. The good thing is, especially for companies within the UK, we're frequently innovating in our day-to-day business. So by offering this scheme, HMRC want to reward companies by offering this incentive.
What are the main things firms should consider when they're starting to look at whether they can benefit from it or not?
So effectively, the criteria that HMRC are looking for can really come down to three main areas. The idea of a technological advancement, uncertainty, and an iterative approach. And what HMRC really mean by an advancement is the idea that you want to achieve your goals as a company and you try and look at what's available out there or what can be used to a certain extent. But in trying to achieve your goals as a company, you realise that the technology doesn't actually reach the standards necessary. So what would happen there in terms of the advancement basically is that you would try and use the tools available to a certain extent. You achieve a hurdle in terms of limited capabilities, and then the company undertakes a period of work where they go above and beyond what they could utilise. The next part of the criteria is the uncertainty piece, which ties into the advancement. And what that basically means is that in terms of trying to achieve your goals, it wasn't a case of deciding to just add this advancement, but rather there were still blockers in the way of trying to get there. So an example of that could be, for example, say your company is taking in a lot of data from clients or internally, and you want to kind of use that to add additional business intelligence, but the level of data you're incorporating might kind of exceed what can be readily adopted with available technologies. So you have to come up with a way of streamlining and making the process more efficient, which leads to the development of new software. That could be an example of the uncertainty piece. And then it's all tied together by the idea of an iterative approach, which, to be honest, in HMRC, they see the iterative approach as the bare minimum of any work that takes place. So really what they mean by that is you try to fix an issue. More often than not, you won't get the kind of the solution first time. That's just the way things go. So when we're talking about it and you are thinking about what R&D projects you have, we would think about times where you've tried to fix an issue, it didn't quite go to plan, but the learnings and research ultimately aids the final goal. So really what we're saying here is, in terms of what qualifies, it's ideas of work that you've undertaken where you know what the personal or commercial goal is, but the technological means to get there isn't clear. So you've had to undertake a substantial piece of work to get to the end goal.
Right, and in terms of you're working in an SME, for instance, you're aware of what the obvious research and development you're doing is, but it covers a broader area than that as well, doesn't it? Because it can come down to staff or premises or things like that as well. Maybe things people don't understand could qualify for some relief.
Yeah, exactly. I think the kind of core distinction on that is basically companies might have their own dedicated R&D department where they know the work inside there will qualify because the reason they've got those resources is to work on solutions that aren't readily available. But more often than not, and a lot of where R&D actually sits, is in those kind of day-to-day challenges that are encountered. And it's actually the strength of the resources within a company and their skills that make it seem like standard activity. But in reality, there is an issue in the public domain, there is a limitation, and they fixed that. So when we think about R&D, the best thing for the listeners to think about is situations where they have encountered a hurdle, and this could be any of the departments they have, not just R&D, and they've had to actually undertake a substantial piece of development to overcome it. So this is one of the ways that companies often miss out, and that is where the ability to claim to full potential is ultimately kind of missed out or left behind. It's because companies think of R&D as their own internal projects as opposed to the public domain, which is the benchmark for what HMRC want to see. So I often break it down when I'm talking to people and informing them about the scheme. It's not the commercial output of what's created within a project, but the technological steps to get there and the challenges within. So as you can imagine, Kevin, there's a lot of areas where companies might not immediately think about, but upon deeper digging and understanding the work within a year period, there are probably little pockets of R&D in quite a lot of places. It means that lots of companies could actually be missing out on some core benefit.
And the benefit would be maybe for an in-house financial director or somebody that looks after the accountancy side of the business, having a help in terms of understanding that, gaining support from people like yourself?
Of course, I would definitely say that's the case, because the financial directors at companies and the accountants they work with, they'll have a very good understanding of this scheme, and from a financial perspective, they'll be able to get that information. HMRC also publish a lot of information on the scheme, but the difference is when we kind of get consulted to work with clients, we often guide conversation at first and foremost, what's the context of the work you guys are doing? What are the goals of the company? Has the technology available allowed that to actually take place? And when we talk about that side of things, that's really where we unearth most of our arguments, because, I mean, most companies, if they're working on something innovative as a whole, they'll know about it and they'll feel it can qualify within the scheme. But a lot of the companies we work with, they're trying to achieve real life goals, and a lot of the time the technology just isn't quite there yet. So they might have the baseline to work off of, but in terms of adding those kind of bits on top, the cherry on top, so to speak, the part that really makes the company's capabilities unique is that piece of technology they may have built along the way. They don't consider it an R&D project, because you might get that vision of people with lab coats on and kind of creating new chemicals and that type of thing, when in reality, especially with myself who focuses on the software element, it can be a lot of times where they're trying to use the tools that have been bought for the company, realise that they don't actually tick off 100% of the boxes they look for, and they add that 1%, they add that 2%. And then when you've got that argument and you put that down a page, which is where we usually assist, it means that you can really kind of work with the financial team on the company's side to understand how much they can claim back and maximise that within the scheme's kind of boundaries.
That's really interesting. Thanks for that, Brendan. So if we were wanting to give a couple of top tips to take away from this conversation today, what would be the main things that you would want people to take away?
So first and foremost, I think given the current state of everything that's ongoing at the moment with COVID-19 and just the general uncertainty, the R&D scheme is something that a lot of companies aren't actually looking for in terms of what benefit they can get from HMRC, because there are obviously the dedicated schemes to assist companies, but the R&D Tax Credit scheme is one worth looking at, not only because it can help now, but it will also help the company in the future. And the way that it's structured, the idea is that if you put successful claims with HMRC, you'll get that benefit back, and then you can reinvest that cash into further innovation, which ultimately helps the UK marketplace. So the first top tip I would say is, it's definitely worth having a look at it and finding a chat with the relevant personnel, whether through a consultancy agency or even just your financial director or accountancy firm at first pass. And then I would say that you should also try and keep track of all the work that you're doing internally, even some of the stuff that you might feel as if wouldn't be that big a deal, because as I've said throughout this piece, a lot of the R&D we qualify are parts that initially kind of might get pushed to the side during conversation, because rightfully enough, companies want to talk about the really interesting, cool thing they've created, and they're kind of selling to people from a commercial point of view. But a lot of the R&D can actually occur in those little pockets of uncertainty and hurdles faced along the way. So the second tip to sum up would basically be, don't rule anything out because you don't think the entire piece is R&D. There could be little pockets in there that you're missing out on, and then that could be crucial for the company from a financial perspective.
Yeah, that's great, Brendan. Well, thank you very much for your time today and for passing on those great tips.
No, it's been my pleasure, Kevin.
Thanks for your time today. We hope you found today's podcast valuable. And remember to subscribe so you don't miss any of our future episodes. So until the next time, goodbye.
Our business is founded on trust and collaboration. The subjects we choose for our podcasts are topical and informative. We are always looking for suggestions for new topics for discussion, so if there's an area of IP that you're keen to understand better, please drop us a line at innovation.talks@murgitroyd.com.